Welcome to Wall Street Unspun with your host, Peter Schiff.
But it's a giant bubble in search of a pin, and it's going to find one.
Are you confused with the ups and downs of the economy and what it means to you?
Don't believe the propaganda, and that's what it is. When you're listening to an analyst on a lot of these popular financial shows, you're not getting investment advice. You're getting propaganda.
Get ready to untangle the web of misinformation provided by the mainstream media.
These firms are trying to sell you stocks. Their real clients, their banking clients, are trying to get rid of stock.
And now, here's your host of Wall Street Unspun, the president of Euro Pacific Capital and a licensed broker with a passion for truth. It's Wall Street Unspun with Peter Schiff.
Welcome, everyone. My name is Neeraj Chaudhry. I am an investment consultant in the Los Angeles branch of Euro Pacific Capital, and I will be sitting in today for Peter Schiff. Joining me a bit later in the show will be my branch manager and Peter Schiff's close friend and associate for 25 years. His name is Hemant Kathuria. He'll be joining us probably at the bottom of the hour. Peter is presently in the beautiful country of China. He's attending the Haltra Conference. For those of you who know that conference, that is a major investment conference that's being held right now in China. It's attracted a lot of high-quality speakers, a tremendous amount of interest from investors. Former President Bush is going to be there, George W. Bush, as well as Jon Snow and some other very high-level speakers. Very compelling conference. And Euro Pacific Capital actually has several members of our team over there, folks from, including Peter, but also from the Los Angeles branch. We have John Downs attending, and from our capital markets division, several of our bankers are attending as well. So just a lot of excitement, a tremendous opportunity to meet with companies there, and we look forward to all the ideas that they bring back to us here back in the United States. Well, I'll tell you, today was a very interesting day for me. I think probably things are just so out of whack in this country. It just amazes me. And what amazes me is how nonchalant everyone is when they talk about how crazy things are. I was reading an article in the Associated Press today that almost half of U.S. households do not pay federal income taxes. Now think about that. Half of U.S. households do not pay federal income taxes. That means that all of these new spending programs, healthcare among them, but also Social Security, Medicare, all the entitlement programs that are going to spill over into the general budget and start drawing money from all of the taxpayers. Well, it's not all the taxpayers. It's we've gotten to a situation in this country where if you're not paying federal taxes, and you are receiving the benefits of federal spending, then we have become effectively a welfare state. When half the people do not contribute to the pie, we have effectively become a welfare state. We have gotten way offline from where we were at the start of the country, and even where we were as recently as a couple of generations ago. I don't know where this entitlement mentality came from. My parents came from another country. They came from India. And at the time they came, they weren't looking for an entitlement program. They weren't looking for free health care. They weren't looking for Social Security or Medicare. They were just looking for opportunity. Remember, this was the land of opportunity. And 45 years ago, that is exactly what our parents, my parents, received. This country gave them opportunity. It didn't give them health care. It didn't give them cash for clunkers. It didn't give them cash for appliances or cash for anything else. It just gave them opportunity. And my parents, in their gratitude, and a gratitude that I continue to share to this day, made a better life for themselves, made a better life for their children, made a better life for all of us, provided by the opportunities that were given by the people in this country. So I really feel that we have gotten way off track here, and the last thing that we need is a new entitlement program in the form of health care, and that's exactly what we're getting. And what's worse is that in that entitlement program, there is a provision to set up capital controls for capital that is leaving the United States, which it is going to do. I mean, capital does not stay where it's not wanted, and this government has made it clear that it is not friendly to capital. It's going to be raising capital gains taxes. It's going to be slapping on new taxes onto capital gains in the form of these entitlement taxes. But in the health care bill that was passed on March 18th, which is something that Peter's spoken about, there's now a new bureaucracy set up within the federal government to monitor foreign accounts and ultimately to bring those foreign accounts under federal control. People talk about capital controls as if it's going to be a unitary event, as if the government's going to come to us one day and just wake up and say, oh, we're not going to let your capital leave the country. That's not the way it's going to happen, folks. The way it's going to happen is we will get what's known in the academic world as a Tobin tax. What is a Tobin tax? A Tobin tax is effectively a tax on spot currency transactions. Basically, a Tobin tax says, okay, Mr. U.S. investor, if you want to change your dollars into, say, Australian dollars or Canadian dollars or any of the other currencies that we invest in, no problem. We'll let you exchange your dollars, but, oh, by the way, we're going to put a 10% tax on all those transactions. Well, guess what? Effectively, they can make it less and less desirable for you to trade your dollars in for other currencies because they don't want the money to leave the country. So by implementing a Tobin tax, a currency transaction tax of, say, 10% or 20% or 30% or 50%, they can effectively shut down capital from leaving this country because the tax rates are going to be so onerous that we won't be able to translate our purchasing power into foreign currency terms. It's something that I didn't think would happen as quickly as it has been happening, but the speed at this government is moving is just amazing me. People, quote-unquote, want something done. They want action. Well, folks, be careful what you wish for because that's what we're getting. We're getting action. We're getting health care. We're getting Social Security, which is now turned negative. We're getting Medicare, which is now turned negative and is now a draw on the budget. We're getting capital controls. Be careful what you wish for. We've got bailouts, and I'm an optimistic person by nature, but I see a lot of problems heading forward in where we are. I mean, it's a very, very difficult thing to look out into the future of this country, economically speaking, and see anything positive. There are a couple of commentators that Peter has tangled with over the last few months who have said, well, you can't have a gold standard because there's not enough gold to have a gold standard. You might need the price of gold to hit $7,000 or $8,000 or $10,000 an ounce, and it's not practical. It's not feasible. Well, guess what? That's where we're headed. If you keep borrowing $2 trillion a year, you're going to end up with a $10,000 price of gold. And, of course, the government will confiscate it anyway, so what difference does it make? But if you can get your money out of the country, I think that we are now in the end game with this new capital controls idea. It's looking to me more and more that is the direction that the U.S. government is heading, and it is not a pleasant one. For those of you who are looking to call into the show, I will announce the number in just a moment. There's just some data I'm trying to pick up together for that. For those of you who are looking to call Euro Pacific Capital, you're interested in speaking with the broker, I'm calling you from the Los Angeles branch. We do have brokers in the office now at 310-826-2975. That will ring directly to the LA branch of Euro Pacific Capital. If you're already a client and your broker is not in Los Angeles, he has probably left for the day. But if you want to reach him, you can reach him at the 800 number for Euro Pacific, which is 800-727-7922. If you wanted to call in the show tonight, I'd love to hear from you. 888 888-678-9597. One of the big things is the fact that we have got a major league disconnect between Wall Street and Main Street. So I'm very interested to know your experiences with the economy, and I'm very interested always to hear from international callers. If there's anyone out there from outside the United States, love to hear from you. I think that being an internationally focused firm as we are, it is always very, very interesting to me to hear from people who are outside the United States, especially people who are in places like Asia or Australia, New Zealand, Canada, places where there's really dynamic things taking place, places where the economy is not celebrating the fact that we had a bunch of census hiring and we got a fake increase in the job rate. So love to hear from you as well. Let's go right to the phones. I think we've got quite a board here. Let's go to Jordan in Michigan. Welcome to the show. This is Neeraj Chaudhry, and you're on the air.
Oh, thanks for taking my call.
Absolutely. How are you doing today?
I'm doing wonderful. How are you?
Not bad. I really cannot complain. I live in California. We're getting ready to go bankrupt, but the weather is still 74 degrees, so it's not all bad.
Well, it's cold and rainy here in Michigan, but
sorry to hear that.
Yeah, I'm glad you briefly brought up the gold standard because that's what my question pertains to.
Sure.
I've been reading a lot of Milton Friedman lately, and I was surprised to find out that although he is a large critic of the Federal Reserve, he even admits that the gold standard isn't necessarily practical anymore. And
right.
he said, in his opinion, the best monetary policy is a slow but gradual income in the increase in the amount of money supply. So
right.
I was just wondering what your position is on his position.
Well, here's the problem. The problem is that a quote unquote slow, steady rise in the quantity of in the money supply is really an inflationary tax. You have to remember that when the Federal Reserve creates money, right, what do? They take that money, they put it out on loan to banks, and then those banks turn around and they loan it out into the economy. So effectively, if you increase the money supply, this is how you get the disconnect between Wall Street and Main Street, is because the Wall Street firms get all this raw material for their business, which is known as liquidity. They take a little cut and they dump it out into the rest of the economy. Well, the problem with that is that once that money gets out into the economy, it acts as inflation. And so it erodes living standards and it erodes industrial competitiveness. Peter points out, rightfully so, that during the Industrial Revolution in the 19th century, we actually had periods of deflation that didn't hurt the economy at all. Deflation is not in and of itself a bad thing. In fact, for savers, it's actually a good thing because you have your capital and prices are falling. Remember that your standard of living is effectively your income divided by prices. Well, if you have deflation and you have either a steady or slightly rising amount of capital and you have falling prices, you're better off. So, you have to understand that when people say, well, let's just increase the money supply at 2 or 3% a year, that won't be bad. As long as people fully understand that 2 or 3% is coming out of their pockets and is being then channeled to Wall Street firms who take a bite out of it and then send it out into the economy where it erodes your living standards and erodes the competitiveness of industrial businesses. If that's what people want, you can't stop them from voting for it. I mean, we're a republic, but we've been kind of hijacked by the oligarchs. So it may very well happen, but I don't agree with it. I think you need to have a gold standard.
So what do you think Friedman's basis for that argument then? Because he's one of the few economists that I've heard of besides Peter's father, and Milton Friedman are one of the few economists I've heard actually say what inflation actually is. And Friedman will actually say what you just said, but then again he argued he's for a slow rise in the the total quantity of money. So it just seems to be contradictory to me.
Yeah, there are people who will have ideals, they will have their principles, and then through no malicious intent, through good intentions, they will compromise their principles. I don't know why he thinks that he can compromise the principle of hard money and still maintain his beliefs about kind of true economic freedom and libertarianism. I'm sure he has some reasons. Of course, he's now passed away, unfortunately, but I'm sure he had his reasons for compromising those ideals and those values. I just have a respectful disagreement and a respectful difference of opinion with him because I think that hard money is really the only way that you can put a cap and control on speculation. All that soft money, when you start printing it up and Wall Street gets its hands on it, the share of financial services as a percentage of GDP has doubled relative to what it was in the 1970s. That's part and parcel of all the debt that they've created and that consumers, businesses, and the government has taken on in the last 30 years. Maybe a responsible use of 2 or 3% money growth, as long as the citizens were fully informed and you got them to sign off and accept the fact that this is an inflation tax and that we're going to grow the money supply and it's going to be a hidden tax. You're not going to get billed for it, but guess what? You're still going to pay it. I guess in theory, if you put together that kind of system, maybe you could look at it. But I can't imagine anybody who really believes in the principles of hard money would go for it. So I just have to have a respectful disagreement and a respectful difference of opinion with Dr. Friedman.
Okay, thank you very much for your insight.
All right.
I appreciate it.
Thank you for your call. Much appreciated. Let's go now to Sam in Michigan. Welcome to the show. You're on the air.
Hey, thanks for taking my call. I
Certainly.
actually had a quick question in regards to what you were talking about before with capital controls and having money in foreign accounts. I just wanted to know, as far as the law, is there like a minimum amount that you have to have in the account in order for the IRS or the government to go after that money, or are there certain countries, or how does that work? Like if it's a smaller amount.
My read of the excerpt of the bill that relates to this provision, and I want to make it clear that I have not read the entire bill because it was only 1,500 pages, and Lord knows I have nothing to do but read 1,500 pages worth of new entitlements. But the excerpt that I read does not indicate any minimums. It simply states that if you don't comply with certain provisions of U.S. tax regulations, that the foreign financial institution would have to withhold 30% of the remittance of that account and send it to the U.S. Treasury. So effectively, it starts to put into place a bureaucracy to start monitoring these foreign accounts and to start imposing rules and conditions on when and how you can move that money around. So, is there a minimum? No, there's no minimum. It's effectively just going to hit everybody and just hurt us all. I mean, it's unfortunate, but that's where we are.
So I just wasn't sure because I am a foreigner and I did have a little bit of money overseas. I wasn't sure if from this point forward, if I take out any money, they just tax it at 30%. Is that the case?
No, your foreign financial institution needs to comply with certain new rules and regulations that are being put in place by the U.S. Treasury and the IRS. And if they don't comply with those rules and regulations, primarily around reporting requirements, then your foreign financial institution will be required to withhold this 30% and send it to probably the U.S. Treasury. I looked at the excerpt of the bill, and it wasn't exactly spelled out, but quite honestly, all this stuff is just sort of details that mask. If you take a big step back and you really want to get the gist of what's going on, the gist of what's going on is this is the first step to capital controls. How does it pertain to your situation? I would encourage you to speak with your financial institution to understand. You can ask them, how does the bill that was passed on 3/18, how does it affect our accounts? Now, I can tell you that it does not affect the Europac accounts yet, and it doesn't. Hopefully, it will not affect us in the future. But the bill is called what they call HR. Well, it's the Hire Act, HR 2487. If you ask your financial institution about that bill, they may be able to help clarify that for you.
Okay. Yeah, it's just scary because it makes it more and more difficult to protect your wealth no matter where you go.
That's the key. The key is, nothing ever happens in a big bang. Nothing ever happens in a climatic, confrontational moment like happens in the movies. In real life, it's always very subtle. They just push you a little further, a little further, a little further, a little further, and pretty soon before you know, there's nothing holding you up, and you fall. So, unfortunately, that's the direction that we're headed with these capital controls. Right now, it's legal to exchange money. I think we're probably going to have. We may never have a formal declaration that you, Mr. U.S. citizen, may not convert your U.S. dollars into foreign currency, but we could very easily have this Tobin tax where, okay, you want to translate money into a foreign currency, no problem. We're going to tax it 25%. And effectively you've destroyed that citizen's purchasing power because if he leaves it in the United States, it's going to get inflated away. If he puts it overseas, he's going to get taxed. So you kind of lock all the doors, and then you say, okay, you can do whatever you want as long as you stay in this little room.
Right, and same thing with gold. As far as taxing currency, they can do the same with gold.
Gold is already taxed as a collectible. This ignores the fact that gold is real money. Gold is being treated as a collectible. It's taxed that way. Of course, I'll give you the caveat. Please check with your tax advisor. This is not tax advice. Et cetera, et cetera, et cetera. But my understanding is that gold is, in fact, taxed. If you buy some gold and then later you have a gain and you sell it, you're going to pay a tax on it. Even though, in reality, all that's really happened is gold has retained its value and the U.S. dollars have depreciated. That is not how Uncle Sam looks at it, and that is going to continue to be the case, especially if, as we believe, the gold price continues to rise. That is going to continue to be a problem. If you buy gold, it might be taxed even at a higher rate.
Right.
They're going to do anything they can to keep this fiat currency paper money regime going, and in the end, we're all going to pay the price for it. I hope we don't end up in hyperinflation. It's going to be devastating for the country.
Yeah, we all lose. All right. Well,
we all lose.
I appreciate you taking the time to take my call, and you guys are doing a great job over there at Europac, so I just wanted to say thank you.
Certainly, Sam.
Right.
Thank you very much for the call. It's there are things that are happening in this country that have never happened before, and when one of these things happen, you say, wow, that's pretty interesting. When two things happen, you say, wow, that's really interesting. When three things happen, they form a trend, and you look around and you say, hey, wait a minute, what the heck is going on here? For the first time ever, Moody's came out a couple weeks ago and said, look, the U.S. may lose its AAA rating on treasuries, on U.S. Treasury debt. Okay, strike one. Then there was an article widely covered in Bloomberg that said that there were U.S. corporate bonds that were actually yielding less than Treasury bonds. Now, those of you who are in the finance business or who kind of follow the finance business, you will know that most financial models build in the U.S. Treasury rate as the quote-unquote risk-free rate of return. That is considered the benchmark of returns. Well, that's gone because now you've got several corporations whose short-term maturities are yielding less than the U.S. government. Okay, strike two. And then you get this capital control story where, for the first time ever, the government is wanting to control how and when capital can move out of the country and what the requirements are to move it around. And it, by the way, was not in a Capital Controls Act of any kind. It was snuck in the back door of the stimulus bill. Strike three. I mean, at some point, it's like someone who is overweight and who smokes and who drinks and has high cholesterol and high blood pressure. Is that guy going to have a heart attack? No, maybe not. Maybe he'll survive to be 90 years old. But I wouldn't take that chance. And that's the kind of situation, unfortunately, that we find ourselves in today. We are developing more and more and more of these symptoms, and at some point you've got to wonder what the heck is going on, and that's what we're trying to illuminate today. Again, the number for the show today, 888-678-9597. If you want to reach a broker, we have live brokers in the Los Angeles office right now, 310-826-2975. And if you're a Europac client, you want to reach your broker tomorrow, you can do that at 800-727-7922. Let's go back to the board here. We've got a very active board this evening. Let's go to Herman in New York. Thank you so much for waiting. Welcome to the show.
Yes, hello. Good evening from New York. Can you hear me?
Yes.
All right. I have three quick questions. Number one, I really, really love what you guys are doing. I think you guys are great patriots.
Thank you.
And my first question is, what would you say are the top 5 books to read on Austrian economics? Top 5 classic books to read.
Oh boy, that's really hard. You know, I think it depends on what your perspective is, and it depends on what you want to get out of it. I'll tell you the book that really influenced me was the von Hayek book, Friedrich von Hayek. To me, that book was probably, I don't know, it kind of spoke to me. It woke me up. The reason that I like it is because it is historical in nature. Obviously, it was written many years ago. It's also not just an economic book, but it is more about a defense of free markets and free market capitalism against socialism and collectivism. So, in my view, you know, I like to call, I like to look at economics in the context of the broader social changes and political changes that are taking place. To me, economics does not take place in a vacuum. It's a key driver of society, but I like to look at the full picture. And the Friedrich von Hayek book, to me, probably speaks to me the most. I think that one of the other callers mentioned Milton Friedman. He wrote Capitalism and Freedom. I think that's a terrific book. You know, again, but that speaks to a slightly different take on things. I mean, Friedman's basically an economist and a statistician, so he comes at things from a slightly different angle. Von Hayek I think is terrific. Friedman I think is terrific. I also like Barry Goldwater. You know, Barry Goldwater was maybe one of the last libertarian-oriented conservatives that we've had in the Republican Party. I think that his book, The Conscience of a Conservative, is an outstanding textbook, an outstanding text, and I think that that's another good place to go for really foundation type material.
Okay, all right, and my second question is, gold is money, as you guys have always said. Gold is not just a hedge. What do you say to people that? Because I know a lot of currency traders. I know a lot of stock traders and things of that nature, but they always say to me that there's not enough gold in the world to be used as commerce, meaning if we were actually not to go back to a gold standard, but to gold being money itself, hard money, real money, that there's not enough gold in the world to, to be used because there's too many people on Earth now with 6 or 7 billion people on Earth that there's no possible way we can use gold as money. Now, could you speak to that very quickly?
Well, I think that's the argument that we've been hearing for a long time from people who don't want the free market discipline that hard money imposes on societies. They want fiat capital, or I shouldn't say capital. They want fiat currency because they want to be able to inflate and distort the economy. They want to be able to inflate without directly taxing and so redistribute. I don't buy it. I think that metals have been used for millions or thousands of years. I shouldn't say millions, thousands of years. They've been used, both gold and silver. You don't have to be just on a gold standard. You can use silver. And I think with technology now, there are some services out there that offer a representative product where you've got the gold and you get an account that's denominated in gold, and so you can use that. I don't want to use the names of the companies, but if you do a little research, you might be able to find those. So I don't buy it. I think that the system that we're in now is so distortionary to free markets that anything that we go to in terms of a hard money standard is going to be preferable to where we are now. I cannot imagine just not having hard money. I think the problems with fiat currency, if they're not clear by now to most Americans, they will be soon enough because we're headed over a cliff.
Absolutely. And my very last question, and I'll let you go, is, like I said, I have a lot of friends who are currency traders, and they say that the dollar will always be around, and pretty much that people like Peter Schiff, people like Jim Rogers and Mark Faber, people like that are just scaring people. They're just pundits blowing hot air, and and they said the dollar will be, the pound had a problem 100 years ago. The pound is still here, and many currencies had problems before. Now, how do you? Because I really don't have an argument for that with them, but how would you pretty much present? I mean, what would be your argument against that? Much, the dollar will be around, but
the dollar might be around. The dollar as a currency might still function in the future, but if it costs $50 for then have you really preserved purchasing power? That's really the issue. The issue is not necessarily what unit of exchange you use when you're trying to price your goods. The real issue is preserving purchasing power. So if anyone can explain to me how you can grow the money supply at 10% a year and each of those dollars is still worth, in terms of real goods and services, what it purchased the previous year, I'd be very interested to hear that because that's just not possible. I don't want to have to get into a whole thing where I've got to give your friends an economics lesson, but there's some very basic ideas about the supply of money versus how quickly you can grow real production in an economy, and what is the value of a currency? Why do we even have currency? Why do we even need a unit of exchange and a store value? And bottom line, I'm sure those same people, the British pound is still in effect today, but it's down sharply in value from where it was pre-World War II. So, again, the currency might still exist. It does exist, but what can it buy you? Can't buy you the same thing that it used to. Same thing with things like the Zimbabwe dollar or the old Deutschmarks of the Weimar Republic. I'm sure you could probably find those currencies. You'd have to drag a wheelbarrow of those currencies down to your local supermarket to afford anything of value. But I guess in theory those currencies still exist somewhere. I'm sure people are using them for purposes that are not exactly monetary in nature. I want to welcome my branch manager, Hemant Kathuria, to the show. As I mentioned before, and as most of you I'm sure know by now, Hemant has been a close friend and associate of Peter Schiff's for a quarter of a century. He is my manager and my good friend also for about 20 years. He's my manager at the Los Angeles branch of Euro Pacific Capital, and it is my pleasure and my duty and responsibility to welcome him to this show.
Well, thanks for that introduction, Neeraj. That's really kind of you. It's you're doing a great job on the show. I can't even tell you the amount of emails I'm getting directly from clients stating the high quality of coverage that we're able to provide when Peter's not here. I just spoke to Peter. He's you're welcome. He's in Shanghai along with John Downs, my our esteemed assistant branch manager. The head of our capital markets, Gordon McBean, is also there. Now, the Halter Financial Conference is currently going on. Peter is involved with that. The companies that are there will be potentially included in Euro Pacific Capital portfolios going forward. So there's a lot of good things over there, and as usual, Peter is moving on the road. So what's happening other than that? Well, Andrew Schiff was in Costa Rica. We actually thought he might be able to do the show tonight, but he's just come back, and we're working on some interesting things. There's going to be a new Euro Pacific Capital website. The other day we had a photographer in here, and we did some high-res pictures, and so the new format will be something that I think will be easy on the eyes. A lot of the clients have been giving us feedback, stating that they would like a new website, and so it's coming. In addition,
awesome.
The article that has just been completed, and I feel honored and privileged to be able to have this opportunity. But I will have a monthly article posted on the Euro Pacific Capital website on the right-hand side, where you have John Brown, and then underneath that you have other voices. There will be an article posted by me, and so that is in editing right now, and we'll see if when that's posted. But I'll give you a little tidbit. The title of the article is Reconnecting Wall Street to Main Street, which, of course, Neeraj, you already know because you were heavily involved in writing the article with me.
Sure.
As a lot of things happen in this branch, we do it in a collaborative fashion. The simple concept that two heads are better than one. We can bounce ideas off each other when we're sitting here 8, 9, 10 o'clock at night, really hammering out these kind of things and getting the Peter Schiff philosophy out to both the viewer of the website or the listener to the radio show or the other venues that we get to show the person who doesn't know everything about Euro Pacific Capital, who hasn't really been listening to us for years or looking at the commentaries, a person who wants to find out information. Another thing that's coming up is the Freedom Fest show in Las Vegas. We go, and the LA branch is fortunate enough to represent Euro Pacific Capital at that show. We've done it the last couple of years. We're going to do it again this year. And every year it's a little bit bigger. We really get a fine turnout. And freedom lovers from around the country descend on Las Vegas for a 3 to 4 day period, and there's good conferences, there's good presentations, there's good companies that are coming out there, and Euro Pacific Capital is definitely happy to be involved with that. So all in all, exciting things. The interaction with clients, of course, is the crux of what we do. If you do not yet have an account with Euro Pacific Capital, certainly, there is no excuse. You need to get on the phone. There's brokers waiting, brokers standing by. You can either call the LA branch directly at 310-826-2975, or if you are in the middle of the country or on the East Coast and you want to have somebody in your same time zone, certainly call the toll-free line 800-727-7922 anytime during the earlier part of the day tomorrow. Let them know what state you are in, and you'll be directed to the appropriate branch which covers that territory. And, that's something that is really what it's all about, is protecting your capital, protecting your purchasing power, getting your money to work outside of the dollar. I mean, I have this conversation with clients, and they all understand it on some level, but for some reason, most of them have delayed in acting. Now, why? Why are you delaying? The question is, if you believe that the dollar could suffer a catastrophic decline in its purchasing power, then what are you doing sitting all in dollars? You have no idea. Well, Neeraj, you have an idea because you go through it too, but the listener on this show might think that's crazy because the listener on this show is a more sophisticated listener, somebody who understands the how Austrian economics works. But you get the person who may have just fortunately picked up a copy of Peter's book or saw him on the video blog, etc., and they say, you know what, we've always known we had to do something, but for some reason we never got around to it. So if you're in that category, if you're a listener who's listening in on today's show, you need to call. You need to get in. At the bare minimum, sign up for the newsletter, sign up for one of the reports. The thing that we're doing now with the new website is we're going to have new reports, and I know that the theme, of course, the collapsing dollar, obviously is something that is always going to be relevant. You can look at a dollar chart and you can see that, but, people who have already got all those reports are asking us for more. Well, there is more on the way, so be patient. There are great things coming, both from the recommended list. If you're a client already, you're going to have new ideas offered to you. We just added a new gold miner just the other day, and if you have an account with Europac, you should call in because our mining analysts have a pretty solid record at this time, and all you have to do is be a client, and you already know that. But so get on the horn, get that account open. If you're somebody who just loves cash and wants to sit in cash, it doesn't have to be U.S. dollars cash. There's lots of good ideas out there. There is sovereign debt. There is corporate debt. There is supranational debt. You can get good yields, 4, 5, 6, 8, even 9% on fixed income. There's convertible debt out there. So these are kind of things that the listeners in really need to just take the plunge, and you'll find out that it's not that simple. It's not that complicated. It's very simple investing. So anyway, Nir, do we have any calls?
We do, and there's a gentleman, Gary in Oklahoma, has been waiting very patiently for a large part of the show. I'd love to be able to get him on the air. Gary, please go ahead. You are on the air with Neeraj Chaudhary and Hemant Kathuria in Los Angeles with Euro Pacific Capital.
Can you hear me, guys?
We've got you.
Okay, I got a question. I had a friend yesterday that was listening to the TV, and he heard Karl Rove talk about a possible government takeover of 401k and IRA accounts. Have you all heard anything about that?
There's been a lot of speculation. Go ahead, Hemant.
Well, what I was going to say is this gets trotted out there every so often, and you think about it, what are the directions that we're going in? The idea that the U.S. Treasury can consistently issue more and more debt as we run these massive deficits and then have to actually fund the previous debt out there by issuing more debt. I'm talking about paying the interest. Now, you think about it, there's not an unlimited supply of capital in the world. The goods-producing countries, the countries that are running surpluses, they have a limited amount of capital. They cannot just keep buying all this new flood of paper. You've seen the 10-year Treasury note hovering. It looks like it's breaking out of a head and shoulders bottom formation, and the projection in the short term looks to me like 4.3%, not withstanding today's slight rally in the 10-year. And then after that, I see a bigger formation that's going to push up all the way to 6% on the 10-year. That's devastating for the American business, which is very linked to interest rates. So when they talk about it, they talk about converting the 401ks to this type of government-sponsored retirement plans. You know what the end result is. They have no buyers left for these treasuries. The Fed has been monetizing the debt. The Fed's been going in either through direct purchases, through system repos, through the Caribbean, through London, every which way they can, and still it looks like the cat is out of the bag. 10-year yields are headed higher, and so what's left? Well, they want to rip off the average American who's got most of their wealth in their 401k plan. The consequences to the U.S. stock market are absolutely devastating. We would have a meltdown in asset prices. That is the one thing that makes me doubt that they can accomplish it. The AARP is a very, very strong lobby. Now, the average retired person has money in their 401ks, and a lot of them own a lot of stock. So I have my doubts where they can pull it off. anyway, I hope I answered your question.
What would we do to prevent help us save ourselves in that situation if it were to come about?
Well, the situation is if you do not have the ability to roll that over to an IRA and get it out into some foreign stocks, you are in a pickle because your company probably has limited programs for you to invest. I mean, you want to be able to, if it's an old 401k, try to roll it over. But,
right.
Get on the horn of your congressman and raise a stink.
And, Hemant, I've got to just say one thing here. All investments are not suitable for all investors. And whether it's your EuroPac investment, if you're a Euro-Pacific investment consultant, or your own financial advisor, please consult someone in a professional, an investment professional, with regards to your own objectives, your ability to tolerate risk, and what investments are truly suitable. What might be suitable for one investor and appropriate for one investor may not be suitable or appropriate for another investor. So please, all these things that we're talking about, we are very concerned about the economy. We are very concerned about the dollar. We are very concerned about the future economic health of this country. But I wouldn't just presume to advise you in a vacuum as to what to do. Please consult with your financial advisor in terms of what investments are most suitable for you.
Absolutely correct.
Does EuroPac have any dealings with group plans or people that have 401k plans or companies?
Yeah, you should call your Euro-Pacific Capital broker. If you don't have one, call the toll-free line tomorrow. We can talk to you about being added as a custodian for the 401k and what we can offer. It's not a one-step process, but it is doable.
Gary, thank you so much for your call, and thank you even more so for your patience. I know you had been waiting for quite a while there. Let's go on to Jonathan in Montreal. Montreal, how are you doing up in the Great White North, Jonathan?
I'm doing fine, thank you, sir.
Good. Welcome to the show.
Well, thank you. I'm calling in basically because you, at the beginning of the show, you asked how you wanted to get some people to call you from outside of the country.
Yes.
How things are going out here. Well, that's one thing I wanted to, because I know you guys are very much into investment in Canada, as far as I can see, because of the metal resources here. That's what I understand. But I know for a fact
that's not the only reason. There are quite a few reasons why Canada represents a very compelling investment destination. Resources are a part of it. You don't have this huge government subsidy in the real estate sector that prevented a bubble from forming in the real estate market up there, at least a widespread national bubble. You have a pretty reasonably funded healthcare system. You have low debt to GDP, a lot of natural resources. So there are a lot of reasons why Canada is a favorable investment destination in our view.
Mm-hmm. That's what I find a little puzzling to me, because, okay, healthcare, it seems to be reasonable, but it's always like, for example, it's the provinces that basically manage their healthcare. And my province is the problem when I see, for example, you're talking about there's a housing bubble, but there has been discussions of housing bubbles here, especially Vancouver, very much Toronto. Mm-hmm. Montreal getting there, but we don't know. But it's getting to the point where analysts are saying you're better off selling your house, waiting a few years, and buying it back when it goes down the price. And the other thing is that, well, this is the problem I really wanted to point out there. My province, Quebec, is so loaded up in debt, it's barely ahead of Greece. It's been said it's barely ahead of Greece as far as debt load. That means we're just Greece's debt is higher than ours, but not by much. Now, and on top of that, they've just announced an increase in the taxes, and this is against our own population's will, basically, because everybody's been told, and people want to see government get cut because they think it's too big. So it's getting to the point where there's small talks of imagining the possibility of Quebec going bankrupt. Now,
right.
Well, see, everything's relative. I mean, you've got, we're looking out our window here onto Wilshire Boulevard, and today, driving in on the 405 freeway, Antonio Villaraigosa is proposing that we shut down government services for 2 days a week. 2 days a week. No parks, no libraries, nothing. The city of L.A. is headed for bankruptcy. The state of California is in worse shape than Greece, is worse shape than Quebec. It's a situation where our credit ratings are being downgraded continuously. So from our perspective as U.S. investors, we think that definitely there is opportunity in Canada, as obviously reflected in the currency, as the loonie now is 1-to-1. So you've got a unique perspective being within Canada, and a lot of the things that you say make total sense. I mean, they're good observations. They're something that probably explains why we are not really invested in any leveraged entities outside of the utility sector in Canada. I mean, the Energy Trust carries some debt, et cetera, but we're not looking at buying into the home builders or in any of the banks, even though the Canadian banks have come away from this very well off compared to the U.S. banks, but still, that is not really the focus. We're focused on real stuff. I mean, we want gold, we want silver, we want oil. Some of the utilities have worked out very well for us, especially the type of utilities that, or hydro or water or these kind of things. A lot of ideas which are natural resource-based have worked. And at the end of the day, you still have the one thing that we can't match. You have less population, you have more resources. This explosion in the U.S. money supply is going to push up the value of those resources so high that the nominal debt that you have in Canada, even the provincial debt, will be diluted to some extent because the ability to tap some of that resource wealth is going to continue, and those resources are going to keep rising in value.
I see. So you would see, even though all this, you would still consider it a good investment here, regardless.
Yeah, but I mean, at the same time, I'm a guy who sold my house and I'm renting very happily. So I mean, I once you check with your own independent, market, your real estate agent or whoever else can advise you in that area, you might draw the same conclusion. So on a personal level, it does make sense. I mean, I save 62%. I've run the numbers many different times. I pay 62% less renting my house than I would if I were buying it. And so that those numbers work a lot better on the high end, but they work pretty much throughout. There are certain segments in the real estate sector here in the United States which have come off so much that actually now it makes sense to buy versus renting. But by and large, I still think prices are too high, and that may be the case where you are also. I don't know the specific area, so I can't really speak to it. Obviously, real estate is a very regional and local. There's a lot of factors there that determine the prices. So, it's something that your thinking is correct. It's all a matter of cash flow. It's a matter of income, and so, in that regard, a lot of what you say makes sense.
Okay, just one last thing I'll ask you about this whole thing, and then you can. That's it. Basically, imagine for a second that Quebec does end up bankrupt. Let's say it does that, but the rest of Canada fine. What would it be the reaction for you as investments? Do you see like a temporary fluctuation, or do you see a major thing there?
Well, it's a situation like what's happening in California. Let's face it. California is effectively bankrupt already. Los Angeles is effectively bankrupt already. But the status quo, to some extent, is being allowed to perpetuate itself just because of the standard response on anything. It's too big to fail, that kind of mentality. We all feel here that the potential effects of California defaulting would be so catastrophic that the government will bail us out. I'm sure that probably holds true as far as Greece relating to the Eurozone. It relates to Quebec relating to the Canada as a whole. So a lot of that is similar. You will have sort of an exit strategy there where it's not going to be a collapse. You're not going to be left out in the cold. It's all one day you're not going to wake up and there's no state there. I wouldn't I don't think that is the direction that you're headed in.
Oh, I don't expect that too, but I do expect something to happen that'll make things a little harder as a result. I just wonder how far it'll go.
Well, in general, if you overspend and you spend beyond your means, bad things happen. That is always going to be true. I mean, it can be papered over in the short term, but in general, that is a truism which I don't think will ever change. So, I mean, you're absolutely correct there. Steps need to be taken, and whether that means just looking at the expenditure side and controlling that a little bit better, that's probably the solution. I mean, we obviously are not in favor of higher taxes, so there has to be some fat that has to be cut out. That's the bottom line.
Yeah, at the end of the day, we have to be reasonable,
True. Okay.
Good.
I thank you for the time, sir. I know you've probably got other calls. I just want to say, because I want to pass along a message to Peter Schiff that I hope that he wins the Senate. Can't invest because I'm from outside the country, but I do wish him very much a lot of luck.
Will do. We'll definitely pass that along to Peter.
Mm-hmm.
Thanks for the call.
Thanks a lot for calling. Speaking of the campaign, Peter has been raising quite a bit of money here. He's up to now close to $2 million. We actually hosted a fundraiser for him here in Los Angeles amongst friends of Peter Schiff and people who really believe
event,
passionate.
Right on Roxbury Boulevard here in Beverly Hills. There was a great
you were
turnout.
there, Heyman. Tell us about it.
Well, it was very nice because they had a presentation. Peter spoke, as usual, very charismatic, lit up the room. People
and it was a private event. It was a private event, right? Kind of a.
Well, you know what? This is what really made it so special because a good client in the Los Angeles branch here really has done well. His brother is with us. His relatives, a lot of accounts they've referred. I mean, that's what it's all about. Is you treat your clients well, and good things happen. And so in this case,
it's also about the power of the ideas. Peter really speaks passionately because he believes in it so earnestly and so deeply about free market ideas. Yeah.
That's when obviously whenever I'm looking to hire a broker, it's the first thing I look for. Are you a true believer?
That's right. That's all that matters.
These are the kind of things. I mean, what do you know? I give them the 10-point questionnaire, and you should know these answers off the top of your head as far as what our philosophies are, et cetera, et cetera. What do we do? How do we implement? How do we put that insurance plan in place to protect the average citizen who understands on some level that we are onto something, that we're doing the right thing, but is a little bit hesitant or confused on how to implement that? Well, it's not that hard.
Right.
So,
Hey, we've got one more caller here who has been waiting very diligently. Karthik in New Jersey.
Let's get that in.
Please welcome to the show.
Hey, Neeraj, how are you doing today?
Good. How are you this evening?
Good. I have a very quick question. I've been a regular listener to Peter's Wall Street Unspun, and I've been completely convinced that the U.S. dollar is going to get crushed. But my question is, in last week's Treasury auctions, I read a news article in CNN that there are a lot of investors buying Treasury. But can you tell me why would anyone want to buy U.S. Treasuries even though the United States government is bankrupt?
That's a $64 trillion question. For every trade in the world, there is a buyer and there is a seller. Back when gold was at $250 or $300 an ounce, about 10 years ago, there were people who were selling gold. There were people who said, "Oh, gold is an ancient relic. What is this nonsense? I don't want it in my portfolio. I'd rather buy a tech stock with no revenues, no earnings, and no chance of ever turning a profit." Instead of this barbarous relic. Well, those people went bankrupt, and the people who held on to their gold made a ton of money. Why are there foolish people in the market? I honestly don't know. I wish I could tell you, but I cannot. In any event, this has been Wall Street Unspun with Peter Schiff. I am Neeraj Chaudhary for Hemant Kathuria. Thank you so much for joining us. Thank you so much for the opportunity of speaking with you, and we will see you next week. Thanks.